Good morning, everybody. Welcome to Stockradar Stocks on the Move for another week. Today's date is the 13th of February 2025. My name is Richard Lee and I manage the Stockradar.com.au website for you. Okay, trend power, it's all happening at the moment, which is great. So we're just following our trend. I'm going to go through the process a bit for you today. We've got selected leaders, the bank's doing well, consumer discretionary stocks doing well, diversified financial stocks. There's a wealth of mining opportunities happening in the small end, mind you. So we take signals, we take stops. Some will, some won't. Stay cool. It's a simple step-by-step process to follow with little grey areas to manage. Okay, so be brave, be confident, be aware, and most importantly, stay safe. Okay, so the market's been pretty strong, but during the reporting season now, we must be extra vigilant with our process, although so far surprises have come to the upside for us with things like Ansell, CBA, and Computershare. So they're all pretty good. So let's go to our trend intensity ratings for today. We've got ALQ at the top there, which is kicking higher nicely. CBA, well, we can see the trend there. It mesmerises us, it blows us away, it does everything, but it still goes up, and that's where we are. So that's the most important thing of anything at all, and CBA's continue to make new highs, so that's amazing itself. CMM, CPU I've mentioned before, Pre-Medicus is doing well again, EMA, EVN, all those goldies there, GMD's doing well, Gold Road, and of course JBH, a little bit of a dump, but soon came back pretty quickly this week anyway. So they're the top 10. There's a few more of those on Stockradar because we've got some good trends amongst our 47 stock picks at the moment. Okay, so now let's go and have a look at the stock pick count, which is up 1 this week to 61. So we took some profit on 2 and we've entered 3 more this week. We've got 47 stock picks of 158 stocks, and there are 14 ETFs of 26 ETFs covered at the moment. Okay, so now I'm going to go to the overseas markets, and first up we'll start off with the Dow. There's not a lot to see here. The market's just been resilient. It's up testing a short-term high here. Hopefully we'll get through, but it's bounced strongly. This one's got reasonable volume in the Dow Jones. If we go to the Nasdaq and the S&P, a little bit different there. Bit more selling pressure here up around these highs, so we're getting a bit of this rotation move at the moment, but it's certainly not attracting a huge amount of selling to drive the price down at this stage. And the same thing is with the S&P. So no change to this trading pattern at all at the moment, and so we have no reason to change our position on that. The trend is up and trend is intact. Okay, so let's go to the S&P 200, our market. Again, it's a similar situation, high highs and high lows, no concerns. Occasionally we get a sell-off for whatever reason. We saw it last week, but it's back again and making new highs again yesterday. So our market still looks pretty good at the moment. Momentum's starting to get back on track after a little bit of a correction back there before. So that looks fine. Gold is going bang gangbusters. There's no real change here this week. It just continues making new highs on gold. So it's nearly at 3,000 an ounce now. Great volume there, so it's probably going to go higher momentum at this stage. Copper, well, it's bouncing in it's bouncing in sort of in league with the commodities, but really still within that range at the moment. So I'm not too excited about anything. There's no great amount of volume happening here. Momentum's sparking a little bit higher, so we may see a challenge to this level. But that really is the level we want to see it through if copper's going to start driving some of our share prices, copper share prices higher. Okay, and Brent crude again, it's down, the selling's been down, it had a bounce this week, nothing really to speak of as far as a little bit of a rally, but still this trend is solidly down for Brent crude. Okay, so now we get to the fun part, finding the right stocks for you. Okay, so last week we looked at JBH, Supercheap Auto in that consumer discretionary area, and Harvey Norman also, which is doing well. The insurance is IAG and QBE, which continue to perform well. And we've got a couple of new ones in there. Judo, which is a recently covered stock, and RRL both doing quite well at the moment. Okay, so this week we want to go, well, first let's have a quick look at Ansell. It had a jump through some hoops this week, had a nice little bounce above there, jumped a couple of dollars, which is good. Trend intensity rating is 10, it just continues its trend. Generally, upside surprises will come from stocks with uptrends. And that's what's happening with something like Ansell and CPU, CBO, those sorts of stocks. So Ansell still looks pretty good. The high's up around $43 yet. We're $36 at the moment, but everything looks fairly good here. I love the volume on this when it's going up, so nothing to worry about here with Ansell, despite the rises. The banks are interesting. I just want to go over them a bit today because we've got a couple of minnows. Bank of Queensland, which has been going down for a long time, is starting to go up, and Bendigo Bank has been going up for quite a long time. So I'm going to look at both of them at the moment. I can see the patterns on the banks are quite similar. We've got this resistance area here, which has been going on since January. Okay, and we've got this support back here, this old support back here at 650, and we're getting this sort of slow little uptrend here, a bit of volume starting to appear here. It's sort of slowed a bit, but when we get it through, if it does get through, we want to see this probably expand a little bit. This is positive, it's above the average, so the trend intensity rating is 9 for Bank of Queensland. We have been in this stock for a little while, but it looks like potentially we might be about to break to a new high, and this is coming off a low base, and it yields well. Quite an interesting stock to have a trade on. Bendigo and Adelaide, well, it's already done a lot of trade for us after its big breakout here. But again, there's a similar pattern we can see here. A little resistance since January. We've come back, found support at this whole area here, and we're now starting to rally. Nothing really on the volume front, but it's certainly having a go. But everything else is positive, momentum, moving average. So the trend intensity is still at 8, so it's resilient. Bendigo Bank, it still keeps, you have the pulls back, then you get the impulse moves up, you have the pull back, then we're looking for another impulse move up for Bendigo Bank. Not too concerned about price levels, especially when I look at the next couple of charts, because it doesn't really matter. It's more the price action we're interested in rather than the actual price levels. Price levels are things you need to adjust to in your mind, and it's quite a hard thing sometimes. The market doesn't really care about that. They care about the price action itself. So if I go to National Australia Bank, a similar situation. We've had this resistance area through here. It's the old high up here for NAB, so it's making all-time highs. We've got this little bit of support here, and now a bit of a rally. This one's got slightly better volume, and it's now pushed through to new highs, okay? So its trend intensity rating is 10, and it looks like the trend is going to continue here. And again, the price levels, I wouldn't worry too much about those at the moment. Just manage the trade as you should. It may work, it may not, but as long as we manage it, we will stay safe, which is pretty well my motto of staying safe. So we're in for the opportunity, but we also protect ourselves. So NAB looks like an interesting one. And if we go across to Westpac, it's not that similar. Again, Westpac's been coming off a low base like Bank of Queensland. NAB's been making new highs like Bank of Queensland. So they're sort of diverse. So the top-down approach is really quite a weird one sometimes. So Westpac broken out of the huge downtrend, and it's just continuing on its merry way higher. And again, we've got this similar pattern here with the resistance since January, and this slowly creeping up, buying has now pushed it through, starting to get a bit of volume. And momentum is still positive, but has slowed a bit. It's above the average. So the trend intensity rating is still 10 for Westpac. So I'm entirely happy with all those banks at the moment and what we're doing with them. So an interesting situation, but the trends have been extending to meteoric heights in some of these trends, whether it be IAG, Pro Medicus, whatever. Stocks can just do what they want to do and go to price levels they want to go to. So don't worry too much about that. Okay, the other one I want to look at is AMP. It's another insurer which is doing well. It's more of a diversified finance stock, these ones really. It's had a very, very strong move up here. The pullbacks have just been small and natural, no problem there. Volume, a little bit hard to read this one because we've got a big spike back there. But it's been okay without being wild. I mean, we're affected by the Christmas period, of course. But momentum is good and the average is good. So it looks set to test the next target around $2 for AMP. Trend intensity rating is 8. Okay, so this amongst a lot of other things, and one other stock we just recently got into was EBOS, and you can see very clearly this clear resistance level here of selling, okay, resisting rallies. So what happens here is the sellers must reverse their positions to become buyers and cover their shorts, okay, added to the already powerful buying which is occurring here. We can see that the market's negative. So we've got a market imbalance which drives prices higher, which it's doing at the moment. So we've got a breakout. It's above the average. Volume is better. Momentum is excellent. So we're looking for a move towards the next resistance of around 43, 44. Trend intensity rating of 10 for EBOS. Okay, and then one we did look at, I think it was probably not that long ago, Select Harvest. There's a couple of little outsiders for you. Select Harvest, an interesting situation here. Not a lot of annotations here, but I think you can work all this out for yourself. We've got a downtrend. We have an accumulation phase that's occurred here. We've got a series of higher lows here running into resistance here. So effectively, we have what we call a trend reversal here. Once we've broken above there, we've now gone from lower lows to lower highs to higher lows and higher highs, which is a trend reversal. We've got a bit of volume coming through this on the right side of this accumulation pattern, and momentum is now starting to kick high. So this is a pretty good bet, this one, pretty good odds on. Trend intensity rating of 9. It's come back a bit, maybe an opportunity. But Select Harvest and a couple of those other agricultural stocks are moving a little bit at the moment, which is interesting. So that's Select Harvest. The other one for you, we looked back in September on this one, was trying to break through the highs here, up around $16, but Nick Scali's certainly been broken here pretty quickly this week. Straight through, very decisive pattern there. We had some good volume through there. Momentum is good. His trend intensity rating is 10. So it's not in my 180, but it certainly is a stock that's been doing very well since the middle of 2023 at $8. It's now up around 18 and looking to want to go higher. So that's Nick Scali. So there's a few stocks for you this week. I can't cover all the ones that are exciting at the moment. There are plenty out there. Go to Stockradar, see where my stops are, see where my entries are, and it will all become clear to you on all the stocks that I cover, apart from just the ones you're seeing here. Okay, so that's what I want to do there. The newsletter was out last week. Okay, so now I want to go to some slides. Okay, just talking a little bit about trend power and how we sort of manage it. Okay, so now is certainly the time for trend followers. We can see the market going higher. Not all stocks, but we look at specific stocks, and there are plenty of specific trends out there for us to follow and make money on. The stock market always repeats. So I know I've been banging on for a couple of years when this market was going sideways. Eventually this trend will recover itself. It always does in the stock market, and now's the time. So it's a time to be brave and be confident and go for these shots at the moment. Okay, so who knows where it's going to go. So I'm just going to show you the 5-stock energizer here, and this is what's happened to this one. It did have a couple of tough years here through COVID and the correction we had here, and now we've seen this rally here. So the extra leverage we get from just having 5 stocks and being fully equitized gives us this sort of power. Okay, the 10 stock is not so great because it's spread across 10 stocks. Okay, so one stock has only 1/10 of the effect. With the 5-stock portfolio, one stock has 1/5 of the effect. So when you've got IAG, PME, Ben in there, and now Hub and EBO, then you've got some acceleration of your equity. Okay, so it's doing very well, and you can see the accumulation down here at about 9.1 since 2003. So that's what the portfolios do. Okay, so I wanted to explain to you the simplicity of Stockradar is its greatest asset. Okay, we do things very simply, we don't complicate things, and I think that's what people want and people like. So of the data universe of 158 stocks, I cull out the week, which is in downtrends or going sideways, which is 111 stocks, leaves me to focus on the strong uptrends of 47 stocks. Now, they haven't all come in one week, they come in each week, gradually but surely, and each week we monitor these things and assess them. But we only follow trends. We don't predict. All we do is follow with our stop. Okay, so I'm never predicting where the stock's going to go. You can look at resistance levels and things like that to give you an idea, which helps. But ultimately, on a money management basis, your trailing stop is the most important. Okay, so the simplicity of the Stockradar strategy is its greatest asset. You follow a qualified trend with a stop, which is all you do. It starts trending, you follow it with a stop, and you adjust the stop each week. Of the new Stockradar entries each week, the portfolio service uses a process to filter, qualify, and prioritise each recommendation for you. So if 6 recommendations come in each week, you have to decide with the basic, with the portfolio service. I rate each of those 6 stocks from 1 to 6 for you, and arrange for the suitability of your portfolio. So that's what we do with the portfolio service. So we use a process to qualify a trend and also to discipline ourselves. Okay, you've got to let the trade plan tell you what to do and do what you're told. Okay, so the simplicity of the Stockradar is its greatest asset. We have only 2 simple entries and 1 exit signal. So it's very, very easy for you to manage and for me to manage on a portfolio basis. Okay, so that's just a brief overview of how simple Stockradar is and what we try and do, and that's the premise. There's lots of reading out there in the About section. You can get an idea of how the trend intensity indicator works, some of the top 10 things you do as a trader, a guide to using Stockradar. It's all there in the About section for you to have a look at. Okay, so that's trend power. Again, this week we're having a really good week and a good month and a few months, so it's all happening for us. So the stock market, as I say, is a world of opportunities. We just need to know and plan how to get them. Okay, all right, we have a good week. Watch your trends, heed your stops, keep it simple, have fun, and most importantly, stay safe. I'll see you all next week. Thank you.